Eye4Homes TV presents Buying Your Dream Home Today with Kathy Nelson and Tracy Nelson. And now, Kathy and Tracy.
Hello, happy Friday, and welcome to the show. I'm Kathy.
And I'm Tracy, and we are a real estate husband and wife real estate broker team with John L. Scott in Redmond, Washington.
And you're watching Buying Your Dream Home Today, a weekly webcast that happens every Friday at noon.
These shows are focused on getting you the information that you need in order to go out and buy that dream home with confidence.
And today's topic is financially wise home buyers.
That's the kind of topic we could have used when we were first buying a house.
Many years ago.
But we did okay.
Yes, we did.
But to help us today, we have with us Brittney Castro. She is a certified financial planner and CEO and founder of Financially Wise Women in Los Angeles, California. Let's see.
Let's get her on.
And
hello. How
Hi.
are you, Brittney?
Oh, I'm wonderful. Thank you so much for having me on the show. It's a pleasure to be here.
From sunny California.
It is super sunny here, and it's great. Summer weather for sure.
Yeah, natural lighting for you.
Natural lighting, yes.
Why don't you tell us a little bit about yourself?
Yeah, so I'm a certified financial planner. I've been in the industry now going on 10 years. 2.5 years ago, I left an independent firm and decided to make the full leap into entrepreneurship and start my own financial planning firm, which is called Financially Wise Women. So I specialize in helping women and couples build a comprehensive strategic financial plan, really learn how to budget, save, invest for their financial goals, become financially educated and empowered, and really begin a whole new relationship with money. So it's very holistic, not your typical financial advisor by any means, but in addition to doing the one-on-one financial planning, I also do a lot of workshops and speaking. I have online products. I have a 6-week online money class, which I always like to say is the personal finance education that none of us received growing up.
Got that
so I
right.
have that. And, we've just been having a blast really spreading financial literacy, getting people to become more financially wise and just begin to realize their financial goals, whether they're short-term or long-term.
It seems like nowadays the home buyers that we've been getting, especially the young ones, they are wanting to be more financially savvy with their home purchase.
maybe they're just smarter than we were.
Yeah, I think they were because we weren't that smart back then.
Well, I think you're right. I mean, a lot has changed, I think, from just the different generations of even buying a home, right? So I think the millennials, or whatever you want to call this next generation of home buyers, really are looking to confirm that buying a home is possible, but then it also that they can do it financially speaking, and it doesn't make them become house poor, and that they can still do other things such as travel and have that flexibility to live and enjoy life today. And I think that just
Yeah, that is correct, because they want to have fun while they own their home too.
Yes.
So what are the costs of home ownership? What should new home buyers be aware of?
Well, it's a great question, because I feel like having a home is such a staple piece of most Americans' dreams, having that property, that physical home where you can go and have this long-term, residency in. But it also, you have to do it wisely, right? Especially when we look at just the recent housing bubble and how everybody was buying homes and maybe not strategically planning around that. I think it scared a lot of people too from this idea that they can buy homes. So when I work with clients, I always just say it's a great idea, but you really just be clear about what you want and what's realistic in terms of what you can afford. So the first cost is saving for the home down payment. Depending on what type of loan you qualify, you want to save for a home down payment, and usually that's some sort of short-term goal that we got to look at building. Then when you actually buy the home, as you guys know, there's closing costs, and there's sometimes HOA if it's not a single family residence. It might be a condo, or you have to pay some sort of association fee every month.
And those can get expensive.
Yes,
Those can be very expensive. And if you didn't get the, there's primary mortgage insurance. That might be an additional fee. If you didn't get a certain type of loan, you might have to pay extra every month to get that mortgage insurance. And then taxes, real estate taxes, have to be factored in. And, something to always look at is just what additional costs, in terms of utility bills might increase if now you're paying for a whole home, or any additional housework you want done, just those extra things that go into home ownership. And again, it's a great idea just to look at all of these things and really be clear about the numbers, so that realistically speaking, what you can afford, where you won't become too tight in your monthly budget and cash flow, and that you will still have the ability to enjoy life and hopefully save for the other financial goals you have.
Well, and also when you say the HOA and things like that, you have to think ahead of time too where you want to live.
Yeah.
And factor that into some of those fees, because location.
It is the case. And one thing I see a lot of times is, I don't know, if it's different in Washington, but in Los Angeles, it's very expensive, obviously, to own property. And, it's not a bad idea to start small. Like, start with a starter home and, go there. Maybe you'll build equity in 5-10 years, and then you can, upgrade to the bigger home that you want, your dream home. But, a lot of people, I think, they kind of come up with these ideas like, okay, I'm just going to go for my dream home right away. Yeah. And yeah, you might be able to do that, but don't do it in a way that's going to stretch you, and you're just going to be like living paycheck to paycheck trying to make this mortgage and all these additional costs work for you, because you wanted that from day one. then you take all the fun out of life. Yeah.
Yes.
Well, insurance policies, it seems like those can be a good idea. What do you recommend to the financially wise, to be financially wise?
Yes. So the insurance is always a good one, really, as you work and make more money, accumulate assets, whether it's home or different accounts. You want to protect everything along the way, protect yourself, your loved ones, your assets. So some of the ones that I always look at with my clients are definitely the standard auto, home insurance, health insurance. We know we definitely need all of those. But disability insurance, life insurance, and then maybe even long-term care insurance, depending on what age group you're in. So disability insurance is actually one that is often overlooked in people's financial plans. And really, I think it's because we have this idea that, I'll always be able to work. I'll be able to work from home, do something to make money. But really, if you think about it, disability insurance protects your income. So if you can't work because you're too sick or you're injured, you don't want to have to be forced to work. You want to have that flexibility with the disability insurance to pay you an income every month, so that you can continue to pay your bills and not tap into other investments or go into debt to make everything work while you recover. So disability insurance, especially for homeowners, is so key, because if you don't have an income, guess what? Can't make your mortgage payment, can't pay your bills. And, the ratio is about 1 in 7 people between the ages of 30 and 65 will need some sort of disability insurance.
Wow.
It's very high, actually. And the ratio of people who use their auto insurance, which is state mandatory, is about 1 in 90. And then the people who use their homeowners insurance, which is also mandatory, is about 1 in 360. So you can see just by the ratios, disability insurance is actually needed more often. But I always say, because it's not mandatory, people just often overlook it and don't get it in place, and they don't really know.
Yeah, or not being educated in knowing. I didn't know that you can do that. So that's nice to know.
So that, and also life insurance is really important.
Well, you mentioned that, and on one of your videos on your website. Can you tell us, life insurance for homeowners would be an excellent insurance to get. Tell us a little bit about that one.
Yeah, so life insurance, if you love somebody or owe somebody, meaning you have debt,
Yes.
you need life insurance. Okay?
Oh, somebody.
Because
Who owes somebody? I don't know anybody.
debts don't die when you die. And, death and taxes, two certainties, right? That we know we're all going to die and taxes will always be there.
Yeah.
So I try to be light with it, but instead of fearing the idea of getting life insurance, really think proactively. If something were to happen to me and I'm no longer here, what do I want to have happen in my financial life so that my loved ones are taken care of? They're not financially struggling if I'm no longer here to make money and help provide. And what debts do I have that I don't want to leave to my loved ones? So, especially when you buy a home, it makes sense. Get a life insurance policy for at least the amount of the mortgage. So, if you passed away, the mortgage would be taken care of. 500,000, a million. You can look at a term life insurance, which is usually cheapest, but there's also permanent insurance, whole life or universal life insurance to look at. So there's different types of life insurance to always look into. It just really depends on how much you need and what your other goals are and how much you can realistically afford every month. But it is super wise to get life insurance so that you never have to leave your family members in a worse off financial situation.
Well, I thought that was really good advice that you put on your website too. So I wanted you to share that today. So thanks.
Yeah.
Yeah, that was kind of a difficult topic. Let's talk about something maybe a little bit more fun.
A little more lighter.
Yeah, a little
Lighter.
The dream house. When do you
house.
suggest to your clients that they are ready to get their dream house?
It's such a good question. The dream home, you can start saving very early for, but I always think make sure you have the basic foundation in place, which is having enough cash in the bank for a cushion. So I always talk about having 3 to 6 months worth of your expenses in a cushion, a savings account, and having, most of your debts completely paid off or not, there. And it's not that you have to wait to start saving for the dream home until those things are in place, but those really should be the focus, to build a healthy foundation. So most of your time and energy and money should go towards those. And then really if, those things are being taken care of, you're saving into your cash accounts, you're making additional debt payments, retirement, you have that going, then we could start to save for home down payment and be more aggressive with that. But I just see that a lot of people fail to get the adequate cash cushion, or they might have a lot of debt that they're working on still paying off. So it takes, a lot of their cash flow to do those things. And, you don't want to add a mortgage into the situation if really you're already tight and stretched with some of the things you have going on. So build cash, look on your current debts and then begin to see what's realistic. And maybe you have to save 3, 5, maybe even 10 years to get into this dream home and have that adequate down payment. But in the grand scheme of things, it'll be so much better to do that approach versus get in there too quick and then not be able to stay in the home because you didn't plan properly.
Right.
That's really good advice, especially with the market it was. Now, hopefully it's recovering nicely and things will be fine for home buyers, but I'm sure there were problems a few years ago with that situation.
Do you recommend going for a less than dream house to begin with?
Yeah, I think that definitely is kind of tied into what I mentioned earlier. Start small. Maybe you have to get like a condo at first or like a smaller home.
Beach.
On the beach is not a bad idea.
So then we go into the dream home. So maybe we'll see.
Yeah. Who knows? But just be clear about what you want and figure out the realistic time frame to get it. And if it's not to discourage anybody, if you're really aggressive about getting the dream home, then set up your savings goals, make sure you're making enough money and make it happen for yourself. It's totally possible, but you just have to be clear with where you are financially and what you really want. And I think, it doesn't mean you have to wait forever, but just be smart about it.
Nice.
Sounds good.
Yeah.
Speaking of being smart, after you've bought that home, Wait a second. What are you laughing at? After you buy that home, then you probably should be trying to save as well. How can new home buyers be financially prepared when they're making that mortgage payment as well?
Well, and it's kind of like sticker shock at the beginning too, where they go, oh my gosh, there's a mortgage and it's big, or, I forgot that there's this and this with it. So what kind of advice do you have?
Just do some calculations before you get into the home.
Good.
There's so many calculators out there. I mean, I do the numbers with my clients, so you can work with a financial planner or somebody to really help you look at these numbers specifically for your situation. But I've also seen lots of mortgage calculators out there which would say, based on the mortgage, here's your monthly payment, here's what the additional costs might be of real estate and real estate taxes, etc. And then you could get a more realistic monthly total, right? Encompassing all of those numbers. And one thing I always like to do is say, okay, here's the mortgage and all the new expenses to have the home. And here's what you're currently paying for rent, what the difference is, and then see, okay, can you do that difference? And, that still be okay and allow you to save for other goals too. So yeah, go ahead.
A lot of people say that the rent is probably sometimes higher than what their mortgage would be. So how would you help with somebody like that? Would you say save that extra money that you used to be spending on the rent and put it away for a while? Or a couple people have told me that recently, that their rent was higher than, because the interest rates are so low now.
Right.
Do you have any advice for maybe some of those people that are renting high right now to try and get into that mortgage that's lower and help out?
Yeah, I mean, if that's the case, then see how soon you can get a down payment together and get into a home that might cost you less in the grand scheme of things and get you into the goal, which is having a home in general. So yeah, I also think don't be afraid of taking that leap into home ownership as well. And, because it could potentially cost less. I don't know if I see a lot of that in LA, but there are, I mean, depending on the specific situation, it will. And also the tax strategies, the tax deductions that you get as a homeowner. So that those are all things, part of comprehensive planning is seeing, okay, how does this work in relation to everything else you have going on? And then you can make the best decision from there.
Nice. Cool. Very nice.
And really quick for that planning, are there budget tools that you recommend?
Why, yes, Tracy, there are. I actually have one called on my website. It's the budget tool. I've created it. It's an Excel spreadsheet or Google Doc, and it follows the 50-20-30 rule of managing your money, which 50% of your net income should go towards fixed expenses. And another good rule of thumb is no more than like 28 to 30% of that category should be for housing. So that's, you can look at these numbers and see, would you be spending more than 30% of your net income on all of the housing costs? And if so, maybe you're not ready to buy a home yet.
That's
or you need to make more money, 20% is what you're aiming to save, and then 30% is what you can use on fun or variable items to enjoy your life today.
And there was a money class too on this page that we're showing. Can you tell us a little bit about that before we stop?
Yes, the money class is amazing. It's 6 weeks. It's an online course, 3 webinars per week that you watch on your own. I have activities and worksheets with each webinar. You kind of do it on your own pace, but you try to follow the 6-week curriculum. There's bonus videos with other experts, and I believe it's the personal financial education that we all need to talk about money mindset, building cash, paying off debt, saving for goals, retirement, investing, insurance. It's $297, so it's less than $1 a day for a year to get a financial education, feel more confident, feel more empowered with your money. And really, it takes time, it takes energy, and it takes a commitment to be financially wise and successful. But anyone can do it. And I really created that course to help everybody learn what they need to learn to become financially wise.
You know, it seems like this type of talking to you or another certified financial planner should be a prerequisite to buying a home.
Yes, I'm glad you said it. I truly believe it should be a prereq, because then you could work with your realtor and mortgage broker accordingly and really go in there more aware of what's good for you.
Educated. And I think we should tell everybody where we can find you, because I want people to call and get you as their financial advisor.
Thank you. I would love to work with you guys. So my the best way to reach me is at financiallywisewomen.com. You can find out all about me, the services I offer, and on that website you can actually schedule a free 30-minute discovery session with me. So that phone call, I could learn more about the goals that you're working on, share my services, see if the budget tool's right, see if the money class is right, or maybe one-on-one financial planning's right based on where you're at and what you need. So come over to financiallywisewomen.com, sign up for the free toolkit, sign up to request your discovery session, and hopefully I can help you with your finances.
And you can sign up with her from anywhere. It doesn't have to be where she is, because she's got Skype and calls and everything.
Skype. I do a lot of Skype meetings. I have clients all over the U.S., so I'm very virtual based, and we find the right solution for you.
That's awesome.
Thank you so much for being a part of our show today.
Yeah, this has been very informative, and I'm sure everybody got a lot out of it.
Thank you so much, Tracy and Kathy. I appreciate it.
All right.
Thanks,
Thank you.
Brittney.
All right, bye.
Bye-bye.
So I hope everybody checks out her website, because one of the things that we did way back when was we never did any of that financial planning. We just went right in basically and did it. And now I know our kids are watching. I want you guys to be financially savvy and check out Brittney's website, please, because it's really important when you buy a house that you know what you're buying and getting into, and saving some money too along the way.
Definitely.
Yes.
Well, that's about it for today. Thank you for joining us for the show.
And have a great weekend.
Definitely. Bye-bye.